All right, what is good? I hope everybody is doing well. Right now, it is currently August 14th. That's about 6:30 p.m. for my time, and I'm going to hop on here and do kind of a little market review. I haven't done one in a minute for the public YouTube. Just kind of been private ones, but I figured why not today? I mean, today was a pretty big big range day. Not really range. We kind of closed flat for the day on NQ. But there were some really good opportunities for the 1 and 10 validation area, and that's what I'm going to cover in this video. And first and foremost, I kind of want to talk about narrative and what I was expecting going into the day. So yesterday, my narrative was obviously higher as I'm wanting to see this 72-minute swing over here be met at some point, right? And obviously, we're starting to trade up to it, and a lot of times what we see when price gets towards or close to the 50% is we see some sort of consolidation happen, followed by some sort of manipulation where we come up and manipulate up to that 50%, and then a true move could ensue if that is indeed what the market is planning on doing, right? So with that established, I kind of want to drop down to the 12-minute. Like I said, I was wanting higher prices, right? And here's the important thing about narrative and how I go about it. I don't try and predict the markets. I try and react rather than anything. I'm not looking to be like, way before structure even forms on the lower time frame after open, like, oh, this is going to happen, right? I'm expecting this to happen. I'm never going to marry a bias. I need to wait and let proper structure form. And this morning was a great representation of that because initially, right, after CPI was released, I really wanted higher prices, right? But I was able to recognize what structure has formed on the lower time frame charts where I execute, and I was able to rotate back to wanting to engage with what the market is doing now. Remember what I said, we do not try and predict, we react to what structure is formed and is forming in front of us, right? So first and foremost, I kind of want to establish two things, right? And you heard me talk about it in my recent video, and that being 12-minute CSSs. Could be 72, could be 12, could be the 6 that I use for CSS projections, right? I'm using those kind of as an area to understand where price is likely gravitating to, where a retracement's likely to occur, where a reversal is likely to occur, et cetera, et cetera. So I want to establish this before we hop into the video because this is going to be kind of unique and kind of should clear up some things. So first and foremost, like I said, today we finished kind of flat. We overall kind of a bigger range day, right? Big down move, big up move, V-shaped recovery, and then we kind of just started to consolidate into PM before we got a little initial rally after rebalancing this area right over here. So what I want to do is with this right here, right? And I assume most people should have a grasp on this and understand what I'm about to say with these CSS projections. But simply put, all you do, right? We find our CSS, right? We close below this up close candle that puts in this high over here. This is going to be where I'm going to anchor off of from this wick high over to this wick low. Why? Because I know on a lower time frame that this area is likely, not likely, almost always going to be some sort of manipulation. Like this is going to be the last up move before the down move or the lower time frame downtrend is going to begin, right? So we already know that's going to be a high probable anchor point, and it kind of removes the excessive thought of, oh, do I anchor off of this low? Do I anchor off of this low? Do I anchor off of this high? When you look at it and pinpoint it from the 12-minute, it really clears up that kind of thought process and just allows you to pinpoint the high quality area beyond anything, right? So we have this one established, right? We can see our -1, -1.5, our -2, -2.5, and then down right about here is going to be our -3.5 up to our -4, which is going to be where reversal prone areas is likely to occur. And you can see I don't have it marked here exactly. What I'll do is I'll go ahead and pop this right up here. I'll add this real quick so you can see it. You can see how this -4, -3.5 area reacts. Beautiful, beautiful. That's where I anticipate reversals to happen towards the medium part of the range or possibly up to the high if proper structure is allotted to. And obviously, our narrative over the past couple of days and recent, I'd say a couple weeks, or not a couple weeks, but about a weekish, has been higher prices, understanding that a retracement is likely up to this unmitigated area. So we can understand that once this specific sequence happens right down here with that -3, -3.5, that the high likely target is going to be that high up there. So with that one established, right, what I'm going to do is I'm going to leave this and we'll come back and draw this one towards when we start to get that V-shaped recovery. So first and foremost, I want to hop over into these setups today, and I want to talk about the structure that I was referring to in the 1 minute. Because like I said, I wanted higher prices up towards, I can't remember off the top of my head, I think it's 9222 or something like that, or 19222, I want to say. Let's double check real quick. Yeah, 19222 on the dot, on the dot. So obviously, we did have CPI today, pretty big news driver, and it's always something I'm going to look out for. And a lot of times, not a lot of times, 100% of the time, with the big three red folders, what we're going to see is a big candle. We're going to have a really nice area to pinpoint some highs, some lows, right? We have data highs up here. We have data lows down here. And what we see form, and a lot of times this happens, is when we have data highs form, what will happen is we'll come up, sweep data highs, and then if we get proper structure allotted to, what is likely to occur is we are going to rotate down to those data lows, right? And it's going to be vice versa if it's in the opposing direction if we take out data lows first. So with that established, right, what we see right here, initially coming into the morning, right, we see prior to New York open, we see a great consolidation phase, right? We understand that the high likely area, especially when we're up at data highs, the true manipulation is going to be up here. Now, at that given moment, we may not reach up to that 922 level, but if manipulation has occurred, right, we identify the accumulation, we identify the manipulation, true manipulation, where are we expecting distribution now? Once proper structure is allotted to, we're expecting data lows to get ran. At that same time, right, once our 12-minute CSS confirms, and you can see the anchor point, how precise this is right over here. You can see it's anchored off of this low, kind of intermediate because this is kind of a little bit internal, so it gets a little bit wonky with a higher time frame. That's why I like to pinpoint it off the 12 more than anything. But you can see how beautifully these levels right here. We see this -1, -1.5, our retracement prone area. What do we retrace up to? This imbalance right here, right? We displace back lower. We get a body close below the -1.5. That signifies that we are likely gravitating to that -2, -2.5. This, if proper area hasn't been reached yet, right? What's the high likely area, right? We're going to continue through this and continue to expand lower to fill any sort of imbalances or fractals or CSSs on the left side of the chart, right? But the important thing right here, right? We know, right, that when this little tap happens right here in this -2.5, what is this? Another likely area. It's a retracement reversal likely area. However, when the DOL has not been met, we are expecting this to get a deeper mitigation than just a shallow tap right here. So we can understand that this is going to be a retracement and a continuation expansion is likely to happen. Following on top of that, before we get into some setups, what do we see here? This -2.5, what happens? We get a strong body close below. What is likely to occur? We're going to refer back to this -2.5 to -2 area. In most cases, what you'll see is we'll either come up and tap the 50% of this deviation projection, or we will refer right back up to that -2. A lot of times, this is where some quality setups will happen, especially if we get some sort of reaction rejection off of that set area, right? So with those established, right, like I said, we've identified the accumulation. We see the displacement right here. Strong displacement. Understanding true distribution is going to be lower. So these first two setups right over here, these were the two that I snagged in the morning. Right when we were starting to get down here, there were some quality areas that I was wanting to engage in. The first one being right about here, right when this low broke right over here with our CSS validation. That's where I really wanted to get into a short. But unfortunately, we were getting a little bit shallow mitigations at that initial start of the expansion, right? So this was the first setup I did engage with this morning. Like I said, we're in that -1, -1.5 area. We already got that retracement. We're expecting expansion down to that -2, -2.5. And what we see form right here, right? You can see on this 10-second chart right over here, perfect alignment with our 1 minute CSS right over here. You can see this value low, closed above, value high, closed below, decent displacement. Now, it's not something I particularly require in setups, but if it's there, it's there. The most important factor to me is there some sort of accumulation occurring below the zone or when we tap back up into it prior to a 50% mitigation? That's going to be arguably the most important aspect that I want to see forming, right? Which we do get beautifully here, right? We get this initial consolidation right here. We get the second phase of consolidation after this little breakup right here. And we can understand that on a accumulation, manipulation, distribution event, that the true manipulation is going to be right up here at the 50% right up here. So that's always a great thing to see and to expect in these kind of setups. And I would deem this an A setup. What would have made this an A plus was if we had failed to close on the 1 minute. But again, this is a beautiful, beautiful setup and one you kind of can't turn down. So this next one right over here, right? Kind of carrying the thought process of those deviation projections. What do we see? We see that body close below the negative 2.5. So we understand that now price's objective based on these deviation projections is what? Once we close below the negative 2.5, we're expecting a retracement to some unmitigated area, likely resting within the negative 2, negative 2.5, furthered by a continuation expansion, right? So what we see happen here, right? We get that body close below. We're expecting a retracement back up into here. We come up, we tap this beautiful unmitigated candle right here, also kind of a CSS right over here, kind of lined up very, very beautifully. And when I saw this specific thing happen right over here, right, we see body close below, we see a micro accumulation driven event. We see that expansion up here, right? This is going to be our accumulation. This will be our manipulation. And our distribution phase will continue where? Now that we have found an objective, right, we can understand that the likely area for the continuation is going to be down here. This will be another high probable setup to engage in, right? Quality, 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 right? So now, kind of leading up, and I'm going to go back over to here. We're going to go ahead. What I'm going to do is I'm going to draw a line here because I don't like this big yellow box on my chart. Honestly, it looks pretty ugly and it's kind of ruining the video in my opinion. So let's just keep this level right up here. We'll just going to keep it there just so it's there. So once this has been established, right, what can we now do once this forms, right? The beautiful thing, and I touched on it in a video about QS, the immediate reprices after CSS is confirmed, right? This is going to be the QS formation, reprices it in one candle, right? You can see how beautiful these moves are off of these. And like I said, these are how I can basically kind of gauge what kind of move we are likely to get. Do we get a 12-minute QS, right? Do we get that immediate reprice and immediate rejection? I'm expecting relatively strong distribution. And you can see on both sides of the market, what do we see here? QS, right? Down here to the upside, what do we see? QS, immediate reprice. What do we get on both sides? Strong distribution, right? So with that established, what we can do here is we can get some CSS projections right here. You can see, right, we have our negative 1, negative 1.5, and we have our negative 2 right up here. And let's just zoom in real quick right here off that 12-minute CSS projection. What do we see? Really doesn't get much more precise than this. To the tick, right? So now let's go back over to this chart right over here. And there really wasn't too many quality examples or too many quality kind of areas to pinpoint off of what I would personally engage in. That's kind of my goal here, is to show you setups I would engage in. I'm not just going to cherry pick some setups that happen to work because they were there. I really want to kind of put an emphasis on what I personally take and what I like to see with these so you can kind of get a clearer picture. But with that being said, what we can kind of see, obviously we get a lot of green up bars right here. Not many retracements at all until we start to reach up into this area when we start to see some more structure right over here for us to refer off of to, right? So what we see here is a relatively clean example. This is kind of a representation of what I like to view as kind of one of my favorite setups. Right over here, you can see we have this area resting right over here. And it's kind of important, and a lot of times it doesn't have to form like a valid area, valid zone on the 1 minute. But if I see a short-term high broken like this or short-term low for the respected trade, where we close up above a high right over here, I can understand that the structure on the lower time frame is going to be a little bit higher probable than per se that we didn't have this. Like if we go over to, there's probably an example, where would a good one be? Because it doesn't happen too often. And a lot of times this will happen. Those are going to be the higher probable trades. But we'll find an example here in a moment once we kind of go over the setups on this way up right over here. So we've established our lower time frame area, right? We can see it's validated with our CSS over here, right? Perfect alignment, beautiful, beautiful, beautiful. That's my favorite thing to see. But like I said, when I see a short-term high broken right over here, and we start to distribute up right at that same moment, what are we doing on this way down? You may say, well, we're rotating down. Obviously we are. And I'm going to say this is accumulation because it is. We are occurring. What is occurring here is trend line accumulation. The dog just came in. Sorry if he's making some noises. But what we see right here, right? We see some trend line accumulation. How do we know it's trend line accumulation? Slower grind move down. We're putting in several highs that once we rebalance this area, we can understand that the market is likely to pivot and rotate and put new highs. Because in this current structure, if we're focusing on current structure, we understand that market is making higher highs and we are wanting to engage in setups that go into that direction, right? But beautifully, you can see here we get that 50% tap, we get that move right back up, and we get a really nice distribution continue to the upside right over there. So now kind of if we go a little bit higher up over here, what we see here, this is one I would be a little bit hesitant on. I know this is going to be a little bit more of a quality area on the 5 second because I don't really like taking tiny little areas, but sometimes the CSSs can line up to a point where it's like that. But I still want to talk about this setup more importantly because of what happens right here. But as you can see, we have this high broken over here. Technically not a valid area in the 1, but as long as that high is right over there with our CSS validation, this is going to be a quality area for me to want to engage in, right? So obviously we see a really nice one-sided distribution. With these one-sided distributions, we can expect in most cases, like we saw on the higher time frame today, a V-shaped recovery or a V-shaped move back down to the basically quote-unquote demand area where price caused this move to occur, right? Now, I want to talk about this specifically right here. What do we see? Strong distribution down. At that given moment, when I see the strong distribution down, I am completely pulling my limit until I see some form of accumulation occurring right here. What do we see happen, right? Price stalls out right below that 50 or right above that 50. We can expect when this happens that a likely manipulation is going to occur here. Now, on a lower time frame, this is just a really nice sweep of this low, right? We see our really nice manipulation. Now what's going to occur? Distribution driven event. And really, if you want, when these kind of moves happen like this, you can target this high, you can stretch it, you could target this unmitigated candle. It happens quite often. So that was that setup. Right over here, nothing over here that I would play. Obviously, no valid CSSs on that way up the way I like to view them. And same goes for this move down right over here. We do have the CSS never repriced up here. We do have this bigger CSS up here. Oh gosh. We do have that bigger CSS up there that never got repriced either, but I would have liked to possibly see those, especially after what happened, right? We know our deviation projection right there, that -2, -2.5, that's going to be a high likely area to possibly want to engage in some shorts back to the downside, right? So now, kind of if we get on here, it gets a little bit sloppy leading into PM, and I usually try and avoid this kind of price action. I'm just not a huge fan of it. I've never been a great range trader. I'm actively trying to get better at range trading, right? I'm understanding what is happening, what is there. It's just not one of my personal strong suits, and I'm able to recognize that. And when I get in conditions like that, I kind of get off the gas because I'm more so of a relatively expanding market kind of guy than anything. So with this right here, what we can see, it's a little bit sloppy just based on structure right over here. But we do see this high broken right over here. Now, one of my favorite setups. We are kind of creeping into an imbalance, but at that same time, we did have some sweeps over here, which is always good to see. As we are referring back to, if we really zoom out on a bigger level, where are we referring back to, right? And this is kind of important to understand. Always know where you are, right? That low to that high, we're at that 50% area where a bounce is likely to occur, right? And what we see here, right? We see our 1 minute CSS over here. We got our validated area. We get a nice reprice. We get up a nice little move ski right over here. Similar to that last setup, what do we see happen right here? Overall accumulation as we creep towards that 50%. What do we see, right? We see a stall out right here, refers back higher. Now we can understand that there could be a chance that we get a deeper mitigation. But this is a beautiful thing to see right there. So now if we go over towards this setup, this is kind of something I want to talk about. Usually these are ones I kind of try and avoid. Over here you can see, and I want to pinpoint these so you can actually see them and understand what I'm talking about. I still make sometimes a mistake of taking setups against this, and I pay the price, and that's part of the game. But everything and every trade you take is always going to be a learning opportunity, regardless of the outcome, right? But as you can see here, we do have this high over here, right? Price fails to put in a new high over here. And when this occurs, I'm expecting in most cases that this is likely to get ran or get a really deep mitigation. I'm not a fan of those kind of setups. Usually I want the ones that are going to put me in a position where I can get that 50% tap, just really shallow mitigation of that 50%, and then that expansion up towards my TP and beyond that, right? But you can see here we have this area on the 10-second chart with our 1 minute CSS paired. Right over here, if we draw this over, you can see that price does ultimately respect that and goes up towards our little swing high on the 10-second chart. So Now, this was a little bit bigger of a one. That one worked, but I don't want to talk about that one for this video because it doesn't pertain to it. But again, what we see here, this is kind of in these situations, this is more so kind of based off of our accumulation right here. Had this have rotated from here, right here, I would not have wanted to engage in this because I have an opposing fail to close me. I personally don't like taking those kind of setups. But what we do see is we see a really nice accumulation driven event. This is kind of a little bit sus, seeing this move down and body close below and then immediate return back into the range. But we do see price stall out on a candle by candle basis right about here. But at that same time, what we can identify is we already have this body close below over here. We get that tap right here near the 50%. A lot of times this will give a deeper mitigation and you can trade that accordingly, right? But ultimately, this would have delivered if you did take it. And I'm sure some people did end up taking that. So now, when we start to get really sloppy over here, I kind of want to touch on some things because there will be some instances where this happens and you need to be able to recognize it. I'm going to talk about this long first, right over here. So if we look at the true area, right, our structural break up here, this is going to be our true zone. Okay, we see price. What does it do? Price shows up above, right? We get a nice consolidation phase. We get a true mitigation of the whole area. Now, a lot of times, like I said, with the CSS validation, depending on how the market is moving, what can happen is that area is going to be, in a sense, if it's in a larger, higher time frame area, it's going to be the move origin of that area in most cases. Those are the ones, when we are in a larger area, those are the ones I want to focus on. But you got to understand one thing from what I have personally seen back testing is when we get a true zone mitigation like this, right? And price taps to 50% of this, goes to true zone high. I'm completely going to ignore this now that this has formed for one reason. The plan and objective was already complete to me. I don't really pay too much attention to the 70. The 50% in that first tap is really going to be my focus and where my focus is at beyond anything. That's kind of something important to recognize because you can kind of run into some issues sometimes where you'll get those setups where the true zone's already mitigated and price just blows through to where your stop would be. And that's kind of a little important to recognize. So over here, if I delete this down here so it kind of clears up the chart a little bit at that same moment, if we're kind of really looking at this, what we see, and this is kind of important with fail to closes and what I like to see, and the only time I will take a trade with the fail to close against me is when we have a intermediate high right over here, right? We can see this fail to close occurs. I'm expecting this to really give or be kind of the manipulation area, and I would be comfortable taking a setup with that below and with that present, right? So what we do see, price sweeps this area. We kind of get a really nice consolidation phase. At that same exact time, right, we have our 1 minute area up here, right? This is going to be the true area for me up here on the 1 minute. We see price come up to the 50, stall out right before. We get another accumulation driven event. We get our manipulation, and then we understand our true distribution is going to be where? Lower towards these lows. At that same moment, what do we see down here, right? We see some equal lows, relative equal lows. If I can anchor this correctly, right over here, we see this low, we see this low. We understand once a true mitigation has happened, that is going to be a high likely area for the market to expand to, right? And I want to touch on this setup right over here. We do have this internal little swing. My focus would have been this more than anything. This is just the proper area to engage off of. And this is going to be a good representation of what I like to see above zones right over here. You can see we have a really nice accumulation driven event. Very good accumulation. We get that sharp manipulation down. These are the instances where I am fine with not waiting for a little kind of stall out towards the 50% because of how large and how substantial this manipulation is. A lot of times when we get a manipulation or a accumulation this large, the manipulation is going to be quick and it's going to usually be very, very accurate. In terms of what it reprices to, and you can see how this delivers beautifully. You may have ran into some bill issues depending on if you are on MEQ or MEQ or NQ, just depending what you're trading. A lot of times they're kind of a little bit out of congruence, and you can get a fill on one, you can not get a fill on the other. So it's a little important to recognize. So now, kind of if we do continue forward, we do have this area right over here after we had cleared these highs over here. We got some decent displacement down into the range. This is not, I know this is going to be a valid area on the 5-second chart. And this is kind of a good representation too of what I require. This would have to be a down bar on the 10 second. I don't pay attention to the 5 if I'm being honest. I do all of my work on the 1 minute, the 2 minute. in the 10-second. But knowing that this is likely a valid area on the 5-second because of this swing low is going to be important. And you can see how price did respect this area precisely, right? Again, at the same moment, we were seeing a nice accumulation driven event right over there. This one obviously works. This is nothing special for me. This is not one I would personally trade just based on this move down. Not a big fan, especially once price is traded that far away. But it is, I will say, it is beautiful to see, even though some areas I don't like that they do end up working out. And that's perfectly fine, in my opinion. Some people may say, well, you're not trading the edge. And I can disagree with that, because if you can eliminate some things just based on what you have determined in your back testing, that is going to be what pinpoints you. Because at the end of the day, every trader is individual. There's going to be a little subtle differences between each trader. It could be the same model. It just comes down to what you have found in your back testing, what you personally see, right? And what you understand clearest, and abiding by that more than anything. I think that's an important thing to touch on in this video, because there may be some areas with this kind of validation that you see that I have never talked about. And that's a beautiful thing about this, is we are able to each individually recognize little nuances in price and be able to engage with that in certain scenarios. So that is going to wrap it up for this market view. This is about a 26-minute video, a little bit longer than I expected. But I appreciate y'all, and I hope this helps in terms of the validation, because I haven't posted a video in a little bit, been busy. But as usual, if you have any questions, feel free to comment down below or shoot me a tweet on Twitter. And I will try to answer it as fast as possible. I appreciate y'all. Y'all have a blessed night, and I'll talk to y'all soon. Peace.